Hello everyone, thank you for joining us. Today we will be talking about a business line of credit with Ms. Sherry Tolbert.
Hi.
And so I had a personal question. So when it comes to a line of credit, I would think that's similar to a small business loan, but how would that be different? Am I wrong? Am I correct in that statement?
It's a good question, Jenny. That's a line of credit. Well, a business loan. Let's say you get a loan for $20,000. You get all of the $20,000 deposited in your bank account at that moment. The business line of credit, it almost looks online. It just looks like an account, and it has $20,000 in it, and you could take it out. It works a whole lot more like a credit card.
Oh, okay.
And so you would just transfer money out of there when you needed it, and only pay interest on what you've transferred out. So that's nice, and so you can get bits, and there's a limit to how much you can get. So that's good too, especially when you're first starting. It keeps you in check, and you want your business making money.
Of course, yeah.
But this is a good way to have a little bit of extra money to help build, because to get bigger and to build or maybe hire employees, it helps to have some cash. So,
of course.
So that gives you that leeway, and then you should earn the money with whatever you bought or whatever you did, and be able to pay it back in a relatively quick manner.
Oh, okay. And is that like line of credit, does that continue on, meaning you can use the money later too?
That's a good question. They usually last for a year.
Okay.
And I've heard them called revolving lines of credit. You'd have to talk to a banker person, but in general, how I've seen them operate is they go for a year, and then at the end of the year, the bank wants all your financials, all your tax returns, all of that, and you can redo. And as long as you handled it correctly, they'll go again. And so usually everybody likes to keep it going. Yeah. And it's nice to have that, because you just don't know what the year's going to bring.
Exactly.
And it's much harder to get a line of credit when things are going badly.
That's true.
So you should have one if things are going fine, and then you have that backup so you can recover and build from whatever might happen in your year.
Oh, okay. Well, thank you for that. And when it comes to secure and unsecured lines of credit, how does that work?
Well, that's very good. It's an unsecured line of credit is like a credit card. They can't come a car loan is secured. If you don't pay your car loan, they'll come get your car. But your credit card, they're not going to come get your new pair of shoes. They don't care.
I see.
Yeah. But if you get any kind of a size of a line of credit, they're going to want some collateral, and so they'll take, because they're a lot of times, like if you were hiring a new employee, they can't come take your employee. There's laws. So what they do is they'll just put a lien on all your business equipment, all your computers and all of that. And it's not like they want those either, but they have something they could come get. And they know you're not going to risk your stuff. You're going to pay it back. So it just gives them some security.
Oh, okay.
Yeah, good question.
And can any small business just get this, or what would be some basic requirements that they would look for?
Oh, that's good. It depends on where you get the loan from. From a bank, they like to see a year or two of income. They like to see, $100,000 of income over the lifespan is what I've heard. I think the banks generally have lower interest rates, and so that's a nice place to go get your loan. On the other hand, if you're in your first year of business and you're struggling all of a sudden, you may be tempted to go out and get one of those online loans. And you'll hear about those all the time on the radio. They're offering.
Yeah. And you see them everywhere too.
Yeah. And they're good because they'll get you out of a cash flow issue. The interest rate's going to be a good deal higher than the bank. But the online people won't be asking for as much information because they're going to get you on the interest rate.
Yeah.
But the way I've seen them work is, and maybe not all the time, but generally if you get those, they're going to take the payment out of your bank account on a weekly basis or a daily basis. They're getting their money. So they could potentially cause more harm than good. So you need to be very careful, and it would be like maybe a $5,000 one of those. I wouldn't get anything that was
higher.
No, because if you're having trouble right now, what you don't need is more hands in your till. So So yeah, but it would, in a short term, for a short term fix that you know you can be super disciplined about, and actually maybe a big customer's paying you late. And you know they're okay, they're solvent, and you feel confident they're going to pay you. There's just been some glitch or something like that. Then you could be, okay, I know I'm going to pay this right back, and I know when I get the money, I will pay it back. You know, you just have to have that feeling. But if you're just scrambling, and then maybe that's not the best way to go. You might, sell your car or do something that's a little bit more.
Makes a little more sense in the moment. Yeah, depending on the situation.
Right. You just don't want to dig a deeper hole. That's the thing.
That's true. That is some good advice right there. Well, thank you for joining us, everyone. I hope you learned a little something. I know I did. And you guys can join us in 2 weeks when we'll have our last live event for the summer. Thank you.
Thanks.
Bye.